Okay, we start. Yeah, so thanks for taking this, Aditya. Before we get into the introductions, right, I just wanted to tell the audience what we're doing here at Start Analytics. I think the goal is to get to a stage where data becomes a citizen, right? Personally, I believe it's not entirely used to its best capacity, right? Across
Mhm.
the industry in different capacities, but like something that you are doing at your financial investing case, right? Similarly, in companies in different capacities, it's still treated as something that you report or you look in, and not exactly to drive decisions or make it as a key part of strategy, right? And
Yeah.
somewhere there, I realized that the major gap is with not just with the tools and all. The major gap is with the intent and the culture that it's there, right? Like it's more with that. And the idea behind this podcast is to bring in folks from different data backgrounds, different careers, journeys, so that both one we can bring a different perspective than what it's typically there in the market, and the other one is like also inspire people to go out and try those different careers, right? Or the opportunities.
Right.
And yeah, that's there. So maybe Aditya, will start with your intro, like what do you do, why you do it, and yeah,
Okay. Yeah. So I'm Aditya Raghunath, and I completed my BCom back in 2009,
yeah,
and after which I worked with a couple of financial companies. In primarily in the back office and middle office in operational roles such as trade reconciliation,
mm,
and which was very operational in
yeah, yeah,
nature. So once you're in the role of for 6 months, and that's it, you're doing the same thing again and again.
yeah,
Then after that, like almost every guy who's done his BCom, exploring other options about how to grow your career, and I started looking out for options, and I did my MBA,
mm-hmm,
which again is a common path that most people take.
yeah,
And after 2.5 years of working, I did my MBA in finance and marketing
mm-hmm,
from DFI Management Institute, Manipal.
uh-huh, uh-huh,
And yeah, I soon after my MBA got over in 2014,
uh-huh,
I got my first gig with a US based fintech startup called
okay,
Market Realist.
okay,
And that is how, I came into the financial content and data space.
right,
Uh, so over there I used to cover companies part of the technology sector that are listed on the public market. So we used to cover news
mm-hmm,
and analyze companies such as Apple, Cisco, HP, Amazon, and all of that.
right, right,
Basically, tech stocks part of the S&P 500. I was part of the team that covers the tech sector.
okay, okay.
I was with the company for 5 years,
Uh-huh. So,
and
so the company used to provide these recommendations. Is it like basis your?
no. So actually, I started in 2014, and the company was founded just a year back.
Okay.
So initially, their business idea was, to start a blog or start a platform where you'll publish content, and once you gain traffic, after that, retain customers by providing services such as recommendations and all of that.
Okay. Okay.
So
But
yeah, so in the
idea was
first two
to
to three,
mm, to turn content into a
yeah. So
whole.
the first, right.
Okay.
So I mean that is how generally how all the other platforms in the US work, and this
Mm-hmm.
was replicating a similar model.
Mm-hmm.
So yeah, so I was with the company for 5 years, part
Mm-hmm.
of primarily the tech team and the content team over there.
Mm-hmm.
And around 2019, I applied for Canadian PR and shifted over there.
Mm-hmm.
Then over there again, I applied to a bunch of jobs, didn't get any response, any positive response. And in the first 2 months, I got a freelance gig, which was my first freelance gig, and that sort of pushed me into the freelance space that I'm for in the last almost 5 years now.
Yeah. Yeah.
So I mean, once I got a gig with a company called Motley Fool Canada, which is one of
Mm.
the biggest blogs and platforms in the US
Yeah.
and North America.
Right.
My content was published over there, and that brought my content into the picture, and other clients started approaching me, and
Okay.
that's when I knew that I can make a career in freelance. I
Right.
don't
Right.
uh, have to join a company as such, and
Right.
it
Right.
was pretty flexible. I knew that my content works, and so I
Right.
started doing that. And it's been 5 years now. Worked with more than 50 clients
Right.
for providing content, primarily in the fintech and investments, and the last two is in the crypto space as well.
Okay.
I've provided content across blogs, social media, uh, emails, newsletters.
Right. So basically, this is fintech content where you
I mean,
basically,
content for fintech companies
right,
in the investment space.
in the investment space. So basically, the thesis behind every content page would be to explore or investment thesis, or basically slice and dice.
Right. I mean, the content can be anything related from very generic content, like such as how to invest in a stock market,
Sure.
to why Apple is a good stock, and evergreen pieces such as the power of compounding, or
Right.
how
Right. Right.
you need to
Got it.
meet
So
financial goals.
understood. So basically, from the very specifics to more broader
Right.
explanations and how things work. Awesome.
Yeah.
Awesome. And great. Great. You've been doing this for 5 years. Nice.
Yeah. I mean, in the content space for more than 9 years right now.
9 years.
Back to
Yeah.
Bombay now.
Oh yeah. Okay.
India. Yeah.
Yeah. Yeah. So like you said that you were primarily in fintech, and then recently you were doing crypto, right?
Yeah.
Have you like, got into any other space other than financial side of it, like content, but outside of financial, like outside of crypto is also kind of like investment, right? Or have you
Yeah.
been like,
No, I actually haven't written any content outside the financial space because one, I'm not too confident about my abilities. Two, right now, I've been working with a bunch of clients, and that's kept me pretty busy. And this is what I find interesting. I find it interesting. So I haven't worked any B2B SaaS company providing
okay,
content for them,
okay,
or any other company in any other
understood,
vertical.
right, right, and like because you've been doing this content thing for a lot of time, right? And also you've been doing in a very let's say tricky space like fintech, where it's difficult to uh, how differentiate a good content piece from a bad content piece, maybe until the investment plays out or the thesis plays out, right?
Right.
Uh, so according to you, what would you say is the basic three aspects of a good content piece? Like maybe, because when you're doing financial content, right, you're writing this with an intent to influence folks, right? There is an intent to,
Hmm.
uh, you know, convey a very complex or fairly not well understood topic to folks, right? So, what would you say are the three basic tenets that you apply when you're trying to convey or deliver a message to your content?
I mean, the first is to make the content as simple as possible, avoid jargons, because even though a lot of people invest in the stock market, they don't have a deep understanding about the terms and the terminologies that are used, uh, in the equity space.
Mm-hmm.
So you need to make it really simple to understand. It has to flow in a particular manner that is easy to read, easy to understand. Plus, you need to target the specific keywords if you're writing for a blog. The main intention
Mm-hmm.
is to gain traffic. So you
Yeah.
need to sort of keep a mind on getting your SEO keywords right. I mean,
Mm.
obviously, it won't happen for every content piece, but
Yeah.
try to target the most important aspects, such as cover more of trending topics that people want to read about. Try
Mm-hmm.
to write about pieces that in the last few years, like, I mean, the big tech companies are dominating the space in the US. So that is what people want to read. They want to read about Apple, Amazon, the products
Mm-hmm.
that they use, or
Mm-hmm.
Starbucks, or Coke. So
Mm-hmm.
try to find an understanding about what the reader wants, and
Mm.
try to actually get into a space that is that that will work for the reader. So just bit of a
So
thing.
keep it simple and focus on, let's say, what is in the flavor of the market
Right.
from a traction point of view.
And at the end, like if I mean, it also depends on the type of piece that I'm writing. If
Writing.
I am writing about a stock that I believe in, then
Mm-hmm.
I need to provide reasons as to why that the XYZ stock is good, or why is it isn't a right investment at this time. Obviously, you can't do it in like 800 words, but the equity research reports provided by all the banks are too complex to read. They are
Yeah,
like
yeah,
maybe 20 pages, and
yeah,
so
yeah.
you need to actually make it concise, make it
Right,
easy to understand, and make it very basic for uh, the average investor.
right, right. And if you pick up, if you go back and think about some of the few pieces which probably did very well in terms of reach,
Mhm.
outcome, right? And what do you think were the things that maybe if you can share an example, and what do you think, you can just walk us through how you thought of the idea, and how did you put that whole thing together? And
So again, even in this, there's a lot of data that we get. Like every month we have access to data on the content that works, that does not work.
okay.
So during tax season, that people are looking to save taxes, so you will focus more on that type of content. And that you will be like three ways you can save taxes in 2024, or these
Mhm,
are the three tax breaks you can use to save taxes by X amount of dollars. So
mhm.
secondly is content which is trending. I mean, today Amazon is going to report its Q1 results, and that is something which is going to be trending. And I know about that people will read about Amazon. So looking at, I mean, there are some themes that work on a cyclical basis. Like,
Mhm.
towards the end of the year, you will talk about
Taxes.
tax laws, uh, harvesting, and during the tax season, it'll be more about how you can look to avoid taxes, or and generally look at topics that are trending, what people want to read. And obviously, there is a bunch of topics that has worked in the past, and you can try to replicate.
Leverage that trend. So when you talk about trends, like, do you use Google Trends and all, or are there specific tools that you refer to when
Yeah, I
you?
mean, Google Trends is I've used. Then there is SEMrush, Ahrefs.
Right,
These
right.
are the tools that I use, for SEO, and looking at the keywords, looking at the amount of traffic the keyword gets, how we are ranked in terms of that keyword, and how the
The
competitors
competitors is
are.
doing right, right.
So
And
in
so
terms of
basically, even these tools also give you information about trending keywords in the like the seasonality of them.
No, that is Google
That's Google
Analytics,
Trend.
and Google Trends
Trends. Okay,
will is a much better tool for that.
okay.
SEMrush, I use it for all
It's more
other.
from a SEO point of view and
Right.
knowing what key terms are doing well. And understood, understood. Got it, got it. And uh, do you, for your, when you write these blogs or when you write these content pieces, do you use what tools or analytical tools do you use to analyze your data if you're writing something which requires some data analysis?
Yeah. So I mean, when I write about a particular company, so I mean, the most important tool that I use is the company resource. There is a ton of data that you can leverage in terms of their earnings report, their presentations, what the company thinks is their part to progress,
Mm-hmm.
and you get a lot of information from that.
Mm-hmm.
Second is publicly available tools that are free, that is Yahoo Finance, and for charts there is TradingView.
Mm-hmm. Mm-hmm.
Then we also have access to a couple of paid tools
Mm-hmm.
such as Y charts,
Mm-hmm.
where that is a pretty awesome tool because it gives you data for a particular company about everything, about its revenue, past historical sales, historical profits, your earnings, your cash flow, your dividends, everything. So that is an all-in-one comprehensive tool for stock analysis.
Got it.
And
So Vychat is also by Yahoo, is it? Or is it separate?
YCharts is not by it is a
Not,
different.
this is a different company.
Yeah.
Understood. Understood. So basically, you take up the publicly available information and then you combine it with the other free tools and stuff, where the other pieces of information are there, or maybe even dig deeper into specific metrics and all, and then thereby
Yeah.
you put together the.
And obviously, there are other available sources where, if a CEO has given an interview on CNBC,
Sure.
then you can use that and
You can go in check.
publicly available sources as well. But for
Got it.
data, yeah, it is more of.
Got it. And let's say you're curious about a specific stock, or you're curious about uh, a set of stocks, right? So how do you go about analyzing this investment thesis? Like, do you have a set of framework or approach where you probably check out certain set of numbers before when you check certain graphs and all? Do you have some kind of a
Yeah, I mean, so after losing a lot of money in the market, one rule that I have right now is to not invest in stocks that are not profitable. So
okay,
one rule that I have is I
okay,
will only invest in companies that are profitable.
okay, okay.
So that is one rule. That's the
There's
basic
a
rule that
basic,
I have.
yeah,
And
there's a basic
after
rule
that,
to. Yeah, please, please.
sorry, I didn't get it.
No, I'm saying, yeah, that's one basic rule to
Yeah.
filter your, yeah, set.
Yeah, so that is again a personal thesis. And after that, obviously, I look at ratios such as the price earnings, the potential for growth. Like how, I mean, a stock will increase if its revenue and its earnings are going to increase. So, top line and bottom line. These two are the only things that are going to drive a stock's price over time. Everything else can be considered as noise. If you know a company is going to grow by X%, the stock will rise by X%.
So can
So
you
that
can you like probably give explain top line and bottom line with more layman terms, because if maybe somebody's watching who's
yeah, I mean, so
not
top line is your revenue, bottom
right.
line is your profit.
Okay, yeah, yeah. So basically, in short, if your revenue and your margins are going up,
Yeah,
then
the
yeah,
stock price will follow.
yeah.
That is like an easy rule. So just look at companies that are profitable, that are poised to grow their earnings, grow their revenue, have a dominant share in the market, have some type of competitive moat in terms of pricing power, or in terms of if they are not restricted in terms of supply chain. It can be anything.
Mm-hmm, mm-hmm,
Basically, you need to look at companies that are fundamentally strong. Again, the debt levels should be manageable. They have to generate enough profits or enough cash flow to pay their debt. They
mm-hmm,
have to generate enough money to reinvest in their growth. They have to make enough money to grow via acquisitions as well if required.
mm-hmm, mm-hmm,
And at the end they should also have enough flexibility to improve their balance sheet by bringing down their debt or looking at other means of growth. So this is basically a general idea of how I go. Then obviously there are filters that you can look at. If the So there is one metric called the price to earnings ratio, which is pretty common. So if a price to earnings ratio is high, it
mm-hmm,
means that the stock is overvalued. And if it is low, it means it is undervalued. Now, again, if a stock has a ratio of 50,
mm-hmm,
but its peers are trading at a ratio of 80, then maybe it is trading at a discount to peers.
mm-hmm.
So again, you need to dig deeper
But
that,
what if the entire sector is overvalued? Like if let's say the entire sector is overvalued, right? Like
yeah, so uh,
vertically,
Nvidia, right
right?
now it has gone crazy, right? In the
Yeah,
last
yeah, yeah,
18 months, it has risen by, I think, more than 1,000% or something like that.
yeah, yeah, yeah.
So you will place your bet on Nvidia because it is growing at a sustainable pace. Now, valuation for everyone is different. I mean, for me right now, I might feel Nvidia is expensive, but someone will feel it is cheap. But
Mm,
if you feel that Nvidia is a good stock to buy to own maybe 10 years down the line, then its
mm,
current valuation shouldn't matter much.
mm,
So,
mm,
because it is almost impossible
mm,
to time the bottom,
mm,
you might think that you will buy Nvidia when it drops,
mm,
but how do you know when it is going to drop? How much it will drop?
mm,
It can drop 20%, it can drop 40%, it can drop 60% as well.
mm,
There is no way of calculating that Nvidia is going to drop only 20 or only 40.
mm, mm,
So in
So
terms of
you
all
don't
the
you
other
don't.
fundamentals are in the right direction.
Hmm.
The valuation shouldn't matter as much, is what I think.
Okay. 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 But like there is, I think there's this thesis. I don't remember the CEO's name, but I think one of these companies had this similarly during one of these bullish periods, there this insane P ratio. I think they were somewhere like 200 or something, right? So
Mhm.
then what you're betting is you're paying 200 times what it makes in a year,
Right.
right? So that number probably needs to like not just double, probably quadruple every year compared to a reasonable valuation, right? Like, I
Right.
mean,
So some of these companies that have these insane P ratios, like I think Shopify has something of a P ratio of around 100 right now,
mm,
but it is also going to double its earnings. So something with these asset-light tech companies are, that once they hit scale,
mm,
so if they are profitable at, if they make 1 million uh, dollars of profit when they are getting in $1 billion of sales, then when they hit 2 billion of sales, your profit is not going to double, it is going to 5x on that, because they benefit from economies of scale because they are asset light companies.
mm,
So
mm,
these tech companies have the potential again
mm.
to
So
reach
they say
that
that the bottom line will increases exponentially with
yeah, that is
more,
what we hope for when you, it is
right?
again
Not a guarantee,
it's a
but
big
that's
risk. You are
the
not going to pay 200x for a company like Costco or Walmart. That
mm,
is slow
yeah,
moving,
yeah,
low profit margins. You are going to pay it for a tech company that is growing
very
exponentially.
fast. Mm, mm. Got it, got it. So, like, given the nature of the job and how you operate, right? What would you say is the difficult part, the most difficult part of what you do? Like, what's the most challenging piece?
I mean, the most challenging piece is to convince people to stay invested in the stock market despite its volatility. I
Mm,
mean, it has historically, equities have been like the best performing asset class in India, US, Canada, and most other developed uh, uh, economies. So
mm,
I think to benefit from the power of compounding and to build a good enough retirement nest egg, it is important to to stay invested uh, in the stock market.
mm,
And yeah, because it's an asset class that has proven its durability over time.
mm, mm.
So I think that
So,
is the most important thing. Yeah,
so essentially, what you mean to say is the most difficult part is uh, getting the most difficult part is getting people to keep investing during difficult times. So maybe
right.
what you the kind of content you write during difficult periods of regimes
Hmm.
is hard. Like the contents will probably not do that well, right?
Yeah.
That's what you mean by
I
times.
mean, the crash during COVID was the only time when all the page views exploded in the right direction because people, I don't know, were just investing. That was the only time I've seen people investing when the markets fell by 35% all over and people were just putting in money. So that
Mm-hmm.
was the only time which, was the exception to this rule
Right, right.
where people were investing even though
Yeah,
it seems like the world is.
about to end and all. Yeah. So, like, how does your payouts work? Like, do you work on a fixed basis, or is it something where there's a fixed payment and there's some amount that's paid to incentivize a write-up, which probably gets a lot of good feedback and stuff?
Again, right. So it depends on client to client. Some pay me on a per hour basis. Some it is per article basis with
Mm-hmm.
incentives. And
Yeah.
yeah, so it is either per hour or per article.
Okay. Okay.
And these are the two general structures in which,
Got it.
and the
So, so,
incentives are.
so, so the understood. So, in the case of per hour, the incentive or the way for you to continue to write good content is that you probably share this material with folks if they want to, if you want to get the next gig, or if they want to decide how good you are.
Yeah,
So
so right now I have a portfolio that is available online, so I can send them my links.
okay,
Some people
okay,
still want, write up a trial, a write up to sort of see that if
we
I
can get a
can,
sense of,
yeah,
yeah, yeah.
because
So
they have a bunch of rules. Every publication will have their rules, their style of
writing, yeah.
their SEO structure, so a bit of difference here and there.
Okay, okay. And when it comes to the title or the goal of that article, right? Who
Mhm.
decides it? Like, do you decide, or is that something that gets recommended by the firm that hires you?
Again, if it is a bit of both, so generally how it works is when we start off with a new client, then the editor will pitch us ideas. After a while, when you get comfortable the writing style, or that you have the flexibility to tell the editor, hey, I think that this type of content might work, and we should try this. And so it is a bit of both. Uh, yeah.
Hmm. Okay,
Sometimes the editor gives you a bunch of list of articles to choose from, and then you do that.
I see, I see. And uh, like, how does the growth work, like, in this space? Like, is it as you keep getting better? Does is the growth from primarily your rate going up, like your per hour rate of the article? Is
Yeah,
that
I
how?
mean, growth in the sense, I mean, the maximum growth was during the pandemic because I had a lot of time to write, and I had a lot of people who required good content. So compared to 2021, plus 22 was a really bad year for the equity markets.
Yeah.
Lost around two, three clients because
Hmm.
of that. And, they were like, maybe we'll take a break and pause and look at
Get back
after
to it
6
later.
months.
Hmm.
Yeah.
Hmm.
So again, market started picking up in 2023. So growth, yes. Every time I know that my content is pretty good, and I know the kind of money or the kind of compensation that I can demand, and that's what it's again a negotiation basis. The client will be like, it'll be a 6 month gig, it'll be a long term gig, so you have some flexibility in that terms.
Hmm. Hmm.
The new client, then yeah, you try to.
Got it. It's also a function of seasonality. Like, if the markets are doing well, then there's more demand.
It is, yeah, it
Yeah,
is.
yeah, and there's also that angle. Interesting. I didn't know this. How it plays out. Mm. So, yeah. So, if let's say somebody wants to get into this kind of business, right? Let's say they're mixing data journalism with some specific domain, like say you mixed it up with financial
Mm,
analytics, right? Maybe somebody is, uh, they're probably writing for a certain set of other analytical tools or products, right?
mm.
Maybe in B2B sales, analytics, and all, right? Uh, how would you say someone would approach this? Like, how can you approach this as a career? Ensure that you keep getting constant stream of clients and work, and how does that work?
So, I mean, first, it is so there are two things. One is producing really good content, and second is analyzing data. So, the analyzing data part is not too difficult. It might seem confusing, it might seem overwhelming in the first 6 months, but that is true with any new job that you take up.
Mm,
But once you know what kind of data, how to analyze the data, then writing becomes easier. But for that, the first focus needs, you just have to produce content.
mm,
When you start writing, you will be a really bad writer. I mean, when I go back and read my uh, articles that I published back in 2014, they were absolute crap.
mm,
And there is no way I would have hired myself for anyone producing that type of content. I mean, it was actual nonsense that I was. I mean, I didn't know how to structure it. It was, I don't know even why I was that company, why they kept me for so long. I mean, obviously, I improved after that a lot. So the first thing is you just need to write. You
yeah,
will make mistakes. You only then you will know that what works, what doesn't work.
yeah,
It is like running a marketing experiment. You
right.
try 100 things, but one or two might stick.
Sure.
and then you know that what sticks and what works and what doesn't. So just try, whether it is on your social media on LinkedIn, whether it is a blog on Medium. Approach companies, tell them that you're interested in writing for free. You can do that.
Mm,
Publish articles online, get them published under your name.
mm,
You
mm.
know, or a few things, but just start writing is what, because the data part, as I said, will come.
It'll come through. Yeah. You'll keep
It
going
has to come
eventually.
through, because you are going to learn about that every time you analyze a company. There'll be something different that you learn about. Then you just need to go and understand what that term is. How
Yeah.
does it work? How does it impact the company? And that is the same for every company, right? You don't need that, right?
Yeah. The
Yeah,
tenets and the approach
yeah. I
you take
mean,
instant. Yeah.
so when you're analyzing a bunch of ratios, you can apply that across sectors, and that becomes easy after a while.
Mm,
But the more complex part, which might seem easy at first, is writing, because yeah. Then also, again, it depends on the platform. Like LinkedIn, I've been writing on LinkedIn for just over 2 years,
mm-hmm.
and after like 1.5 years or something, I started getting traction in the last 4 5 months. And what I came to know is people just want content that is, to the point. They don't want to read more than 200 words. Keep
Mm,
it as short as possible.
mm,
Keep it as interesting as possible, and
mm,
give an opinion.
mm.
That is what people like on LinkedIn and Twitter.
LinkedIn. LinkedIn. Okay.
Yeah,
Keep it simple. Keep it to the point, and let them
yeah. I
go
mean,
through the
don't
content.
explain it, but it should be in a very brief way.
Very
They
brief.
don't have time for reading a
So yeah, I have
300.
to go through entire story and
Yeah.
yeah, yeah. Interesting. Interesting. So, I asked you a bunch of questions, right? But was there any specific question that I should have asked, what I missed, or maybe I, we,
But yeah, I would also like just want to say
yeah,
that I also started my own newsletter like 6 months back.
okay,
Again,
okay,
it is more targeted to the people in the US,
mm-hmm.
and people who invest in the US.
Okay,
So
okay,
again, the aim of over there is, to again integrate data and make uh, investing really easy, and give a part to investors about how to build wealth over time. It's just
I
been
see.
around 6 months.
Okay, okay.
Yeah, that's the
And
title.
what's it called? What's the newsletter
It's
called?
called Three Big Scoops.
Three Big Scoops. Okay,
Yeah.
okay. Interesting, interesting. Yeah, totally. I mean, I'll definitely sign up and I'll ask folks who are going to the podcast and the posts to definitely sign up at least, hopefully at least
I mean,
10
it will
times.
be more relevant to people who are interested in investing in the US
But
market.
I think we can do that even from India, right? I think it's picked up because
You can,
through End Wealth and I think the other
yeah,
platforms, right? You
in money, grow. I think
grow,
Grow
yeah.
had it.
Grow had stopped it, but I think
Oh yeah, Grow stopped it.
Grow stopped. But I think In Money has a way to,
Vested has,
yeah,
uh,
yeah, yeah, yeah. I think there's this way to do it.
yeah,
And yeah, I think as you pointed out, right, like a lot of people would be interested in Nvidia and trying to invest. So
yeah. I mean, one of the most popular stocks I think on in money is
is
Nvidia,
Nvidia. Yeah,
Meta, the
yeah,
big tech.
makes sense. Makes sense. Great, great. Thanks, Aditya.